Hello, everyone. This is Carlos Clark, and I will be giving the financial analysis of Elite Fitness. As you see, this is the current agenda. We'll talk about the initial analysis, the break even, monthly profit, yearly profit, profit and losses, projected cash flow, projected balance sheet. Funding analysis. So initially, the plan was 100,000 to start the business, but to compete in a larger market of a bunch of fitness centers, the fitness center must open on a larger scale of business. So the amenities that the other gyms offer, we must offer as well to be able to compete and draw in a good customer base. So the increase in funding requirement is due to the personnel plan requirements. So 250 to start the business, $50,000 will be owner funding, and 200,000 will be secured through an SBA 7A loan. And all of this funding will help cover the personnel plan cost. Break even analysis. As you see right here on this graph here, where it illustrates, we break even around $21,000. That is our This is our break even point right there, and you can see the projection and everything going forward. In the beginning stages, the profit is not going to be there for the first 3 months. We should see a turn on the fourth month and a steady growth. These numbers are an estimate, and as you see that yearly the profit will grow. In year three, we'll have a large leap within the fitness industry. It's estimated at 8.7% profit each year. So I think we would surpass that after year three, after year two, and after year three and beyond. It should become a lower um, percentage rise, but it will even out. Profit and losses. So the direct cost of sales initially is going to be 244,000, and that will increase as we go along throughout the years. So the gross margin, expenses, payrolls, all that is listed here. Let's take a look at it. At the bottom, you'll see that initially we have a -2%, -3% uh, estimation, and year two we definitely take a big leap to 6.2%, and for net profit sales. And year three is a significant jump again, where we're almost doubling it, a little bit more than doubling it. Total operating expense, it will increase a little over the years as well, as mentioned. As you notice it, that goes from 245,000 to 287,000. These are rough estimates, and hopefully we can minimize these costs along the years as we start to scale back on a few things and find different opportunities to offer products at a lower rate. All right, so as you see on this slide, the cash flow, net cash flow is represented in blue, and cash balance is represented in red. The chart shows the monthly projections. As you see the net cash flow, it starts to build up after the third month. It kind of balances out. Then month 4, 5, it steadily increases. So again, this is going to be the initial 12 months, the first year of operations. As you see on the balance sheet right here, we have a yearly breakdown for the first 3 years of the assets. Um, we projected to double the assets, a little more than double the assets by year three. Uh, Also, you can see that the net worth at the bottom there, it should be at 79,500 by year three as well. Total liabilities and capital is towards the bottom of the slide. So if you guys take a moment to review that before we will go on to the next slide. So it's 8.7% annual revenue growth that most gyms usually have, and that's our baseline primary goal for annual revenue growth. So one of the key areas of focus is B2B market scenarios is develop the winning strategy to keep ahead of competition. Um, and that is also within the e-commerce also as well, with providing that those virtual classes. Um, we also want to capitalize on the low-hanging fruit and identify a good ballpark value. All right, this concludes my presentation. I appreciate you guys sitting through this brief presentation. On this page, you'll see the references, so feel free to check them out. Thank you.